The Bitcoin market is changing. Gone are the days of wild four-year cycles and parabolic blow-offs. Now, we're watching something very different unfold. Is the legendary four-year cycle dead? If you're serious about buying Bitcoin and understanding Bitcoin's next move, hit subscribe and stay ahead of the herd. In the past, Bitcoin followed a familiar rhythm, a four-year cycle, halving, bull run, crash, recovery. Each time, volatility would explode and so would the price, but not this time. Now, Bitcoin is rising steadily, almost linearly. No blow-off top, no euphoric mania, just calm accumulation. So what changed? Let's break it down. There are 5 key reasons why the old cycle might be gone for good and why Bitcoin's price behavior is evolving. First, the Bitcoin spot ETFs. Since January 2024, US ETFs have been absorbing thousands of BTC every single week. 13,000 BTC here, 23,000 BTC there, even 7,000 BTC in a slow week. That kind of demand. Unthinkable in 2017. And we're just talking about the top 11 US ETFs, not MicroStrategy, not global buyers. Not OTC deals. This wave of institutional interest is creating a smoother, less volatile market structure. Second, sheer market size. Bitcoin's market cap is now over $2.4 trillion. That means pushing the price around takes a lot more capital. When BTC was $10,000, a $1 million buy moved markets. Today, it barely makes a ripple. More liquidity, more participants, less volatility. It's simple math. Third, regulation. For institutions, clearer rules mean fewer barriers. Spot ETFs, custody solutions, legal frameworks, they all reduce uncertainty. And with more serious players entering the space, we're seeing fewer panic-driven decisions. Retail may still fear and FOMO, but institutions, they play the long game. Fourth, correlation with traditional assets. Since 2020, Bitcoin has tracked the S&P 500 more closely than ever before. That's because it's now included in real portfolios by family offices, hedge funds, even pension allocators. So, when liquidity dries up, BTC sells off too, not because it failed, but because it's now part of the system. And fifth, broader distribution. Bitcoin is no longer a niche asset. More people own BTC, talk about it, invest in it. Even if it's through ETFs or proxies, adoption is spreading. That dilutes volatility and creates a more stable price structure. Sure, your cousin still doesn't ODL. But there are more hodlers now than ever before, and that changes everything. So here's the big question. Has Bitcoin matured past the four-year cycle? The signs are there. Lower volatility, more institutions, slower, steadier growth. But here's the twist. Human psychology hasn't changed. Fear, greed, FOMO, panic, they're still part of the game. So maybe, just maybe, another parabolic run will come. But if it doesn't, that's okay. Because for long-term hodlers, linear growth is still growth. This wasn't financial advice, just honest Bitcoin analysis from someone who's been around. If you're stacking Bitcoin, dodging fiat and riding the orange wave, subscribe now. Smash that like button. If you're bullish on freedom, drop a comment if you want a future episode on why the four-year cycle might still be alive. And as always, stay humble, stack sayets, and hodl on.